Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for March 7th, 2022. Well, we got through the first round of Jerome Powell testimony. I doubt we have a whole lot of volatility based on what he will say today in the House, but you never know. But let's take a look before we get into that. How about we look at what happened overnight? First off, Asian markets. Asian markets were mixed last night, mostly lower. Hong Kong was down pretty substantially, down 1.27%. Shanghai also went lower. Interestingly enough, after hitting those new record highs, Nikkei is coming down a little bit as well. Japan. There is a high expectation that Japan will soon be having to raise rates. So you'll want to keep an eye on that. Asia, South Korea, they were higher on the day. If we take a look at European markets this morning, European markets are mixed and pretty flat. That's kind of understandable because at any moment we could hear from the ECB and their announcement on rate decisions. It's highly anticipated they will leave the rate flat, but we'll have to wait and see. So we've got a mix, but essentially small gains, small losses, very flat across the board as we wait for those numbers. Here in the U.S., we have futures trying to show bullishness once again, with NASDAQ doing the best job trying to push up, despite what happened there in Hong Kong last night, trying to push higher this morning and shake off that big, ugly selling earlier this week. So if we take a look at oil this morning, oil is just slightly lower. We had oil numbers yesterday really supporting prices going higher, but then we have this situation of, well, that concern, I guess, of demand destruction creeping up here in the market. And so oil right now is down 63 cents. Brent crude is down 70 cents, and natural gas is up just about 1.2 cents. We have this interesting situation here where gold continues to show strength. And first thing this morning, gold is continuing to push on higher at $2,162 an ounce. Silver is just a little bit lower, but we've got copper, platinum looking higher this morning. And then if we take a look at our bonds are essentially flat here today, maybe just slightly lighter, with the 2-year bond at 4.55 here on the day, the 10-year bond at 4.10, and the 30-year bond at 4.23%. Those short-term bonds, 3 and 6 month, remain strong. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. Very much appreciate it. Let's take a look at the charts here, try to shake off some bias, see if we can figure out how we might want to approach the market for today. Well, I think there was probably a lot of folks really disappointed yesterday with that big gap up and that big pop trying to reverse the move, that big downside selling day. But, it just didn't really develop. We gapped up and then just kind of faded back throughout the day. If you remember, I said just watch for the possibility of a whipsaw unless we can break and hold those. But I have to say, even though that pulled back, I don't see anything bad here in the chart. Clearly, it's not what the bulls wanted to see, and it clearly isn't what the bears wanted to see either. So kind of a ho-hum day overall as we continue to wait for some additional market moving data this morning. So if the bulls can find inspiration today, and you can see they're trying to push here in the pre-market, come back up, well, we can see right here, that's where we need to go. We need to see if we can break through that resistance, kind of break these high points of those candles right in there. And then we can start trying to push on up here and test some of these resistance levels in the chart. I think maybe something right in there. Beyond that, if we start breaking up through here, we're likely going to be pushing up toward those blue sky highs if we can find enough bullish data to move us along. What we could also see if the bears were to come into any inspiration, well, it's not that hard to see right in here. Pushing down below those candles here recently would probably raise a little bit of concern. And then, of course, the major support in here would be the next level to be thinking about. And that runs over here for a ways in the chart. Now, if we were to slip beyond that, that's where things could get really painful. We could drop down into some of these levels in the chart. Stronger support level would be even down in here. So I still think we have that potential for some big point moves to the downside if the market is disappointed. We'll take a look at some of those internals that show me that, but watch that closely. Remember, if we were to draw a downtrend between here and here, or a trend line, we did technically make a little bit of a lower high in here, and a rally back into this area could be the next lower high. So just kind of keep those things in mind, and we did break this trend. If we take a look at our SPY, SPY is in really good shape. There's nothing wrong here on the SPY, and of course everyone was piling back into the tech giants yesterday. Lots of upgrades coming into those tech giants. We're pushing these valuations, really, in my opinion, and it is just my opinion, beyond logical PE ratios, but doesn't seem to matter. Everyone, fear of missing out, is rushing in. And although while that's going on, there was a story out yesterday on CNBC that tech insiders are actually selling. So you might want to consider that carefully. If the insiders are selling to the retail as we move higher and higher and up with that fear of missing out, there may be a problem here to be paying attention to. But if we take a look at our SPY continuing to push to the upside here, clearly we need to break through this area right in here. And if we can, well, then I think we're looking at pretty easy move up here, and every reason to believe that we could push up and see all-time highs once again here in the SPY. So watch carefully for that. Now, if the bears were to find that inspiration today, well, once again, it's not that hard to see these levels in here in the chart. Pushing back down below to this area, we might catch a little support and catch onto this trend. If we fall through there, we've got a little bit of support right in here that we would want to be paying attention to. And then beyond that, we're coming into this bigger area of price support. Now, failing through there would be a bit of a concern, because if we drop through there, we drop into this gap, and I think we could see a pretty substantial decline. So once again, if the bears find reason to engage, don't rule out the possibility of some pretty big point moves to the downside. If we take a look at our QQQ, same thing here. QQQ just kind of stuck in a range, stuck in this price range in here, but you can see the bulls are pushing here this morning. Big tech still doing its job, trying to hold on to this support level here in the chart. So if the bulls can continue to push here and break through these levels right in here, then we'll be looking at a stretch on up here to test these highs and maybe even blue sky highs above. Failing below this level here, of course, is where we're going to run into the major problem, because there is a substantial gap here. Now, we do have a little bit of price support right through there that might catch us before we drop fully into the gap. But you'll want to watch for that potential. If the bears were to find reason to attack, then a substantial point decline here could be possible. So here again, a bullishness, stay with the upside trend, but be prepared in case those bears decide to attack. We could see those big point moves still here in the market. Remember, we gave up this trend here in the chart. And then if we take a look at our Russell, IWM holding in there pretty well. Yesterday probably wasn't what everyone was hoping to see. Kind of just uncertainty here in this pattern. of the chart. But the good news here for the bulls is we're still hanging on to this trend. So if we can hold on in here and find that inspiration today and start pushing up through these small levels here in the chart, every reason to believe that we could stretch up here, testing that major resistance in the chart on the Russell to see if we can get up through there. One of the reasons that could happen is this. One of the things I think we've been seeing is a little bit of rotation into other areas of the market, maybe deleveraging a little bit from some of the tech giants and moving into things that have been overall beat down where there's a little bit more value, PE ratios are better, and that may help the Russell here overall. Now, if the bears were to find inspiration here, pushing down through this little concentrated area right in here, pushing down through there would break that trend, obviously, to the upside, and then that possibility that we could push on lower into this price support of the chart. So again, pretty big point moves possible if the bears find reason to engage. If we take a look at our VIX, now our VIX yesterday didn't back off like I think everyone was kind of hoping it would. So if we take a look at this chart, and I'll remove all these lines, and take a look at this chart, we're moving in a little tiny gradual upside trend, and we still have not come back down below that downtrend. So if we hold in an area right in here, hold in this area, and we create a higher low, that's where usually selling can really pick up. Now, I'm not going to say that's going to be the case, because I certainly don't think we have a market that wants to sell. Everyone is so uber bullish in this market, but that's where those surprises can happen, and it's happened every time in major tops of the market. It is the surprise when we move sharply lower that gets people running for the door all at the same time. Now, if the bulls can find that inspiration today and continue to push them, then let's see, and I think there's every reason to believe it's possible that we could push right back down here into that little upside trend. We'll see if we can hold this area of price support. If that breaks, then every reason to believe we move on down in that chart. Let's take a look at our T2122. Now remember, the T2122, get lots of questions on this, is just nothing more than the 4-week new high, new low ratio in the market. They use the NYSE and do a calculation of what stocks are making 4-week new highs, what stocks are making 4-week new lows. And as you can see, we were bullish yesterday, pushing back up here, so we recovered some of those losses of the day before, pushing on up here in the chart. Watch that carefully here. If the bulls can continue to find that inspiration, well, we've got a nice upside opportunity here in the chart for bullish inspiration. We will also want to keep in mind, though, that if the bears find reason to attack, well, we've got a big downside opportunity as well. And we're in that kind of market where those big changes, those big whips certainly are possible. So be prepared for just about anything. If we look at our T2108, now T2108, also the bulls had that under control yesterday, pushing back up to retest that recent high here in the chart, but we didn't really make any moves to break through. And I'll show you why in just a second, but they're trying to press this up and trying to squeeze this to the upside. We'll see if there's enough bullish energy to do that, but bulls were definitely in control there yesterday, and we still have plenty of support levels below if the bears were to attack. And then our T2107, percentage of stocks above the 200-day, also pushed up there. Wasn't quite able to push all the way back up there and retest that resistance here in the chart, but it was coming up, so you got to give that to the bulls. And once again, we've got plenty of price support below. We're just kind of been stuck in this range here on T2107 for quite a while. The problem that I've been kind of alluding to is in the T2101, or the absolute breadth of the market. And you can see that although we popped yesterday and tried to recover some of that selling yesterday, we really are seeing very, very weak market breadth in this market, continuing as our market continues to go up and up and up and up, led by a very thin sector of the market. And what I mean thin, by thin leadership in the market, we have seen breadth continuing to decline. So something is out of whack here, a major divergence in that. We'll want to watch that pretty closely. If we were to see a surge up to the upside, we need to see that breadth following through on that move. Increase in breadth on a buy wave would garner a whole lot more support in those prices. What you don't want to see is, if you're a bull, is see those bears engage and see that breadth suddenly starting to increase on a sell wave. But so far, we are just so weak in market breadth. It is quite remarkable that we're able to sustain these high prices in the stocks. Let's take a look at our economic calendar for today. Now, first off, let's do earnings. Our earnings calendar today, we've got quite a few notables here to be paying attention to, and particularly in the afternoon. Now, there's still that big theme in here of retail. But as you can see, we got ABM, AEO, BILI, Burlington is going to be in there, CIEN, we've got Kroger that will be reporting today, TTC, STVN, and then this afternoon, the bigger notables here this afternoon are going to be AVGO, Costco, DOCU, LOCO, EOLS, FNKO, we got the Gap stores, GWRE, MDB, SVV, Smith & Wesson is going to be in there, and then the old Traeger Cook will be in there. So watch those carefully for today. Those are your notables, and the best ones will be this afternoon. Let's take a look at some our economic calendar here for today. And our economic calendar, well, we've got a few things, market moving reports here this morning to be paying attention to. First, we're going to get the Challenger job cut report this morning, so keep an eye on that. And then we're going to get international trade in goods. Now, international trade in goods, as consensus is suggesting, that our deficit is growing to 63.7. So a little bit of an increase in an international trade in goods deficit. Watch that. Jobless claims from our ADP number yesterday, we saw that jobs number moving higher. We also saw an interesting thing on the internals of those numbers, is that wages surprisingly went up and work hours went down. So kind of an interesting dynamic going in there as companies continue to hire, and we are not relieving that pressure here on the jobs market all that well for the Fed. So we'll want to watch this one here closely today, and this looks like just a punt. When I see something like this in the consensus, it's really suggesting that they don't know what's going to happen. They just put down what we put down last time. So they're looking for 215,000. Watch carefully for that. If we get a much weaker number than that, that will not be good for the Fed situation right now. If the number starts coming in stronger, that actually could be putting more people on unemployment right now, believe it or not, would be the good thing for the market, and may actually inspire those bulls, suggesting that a rate cut may be closer if that jobs market starts to falter, but so far we haven't seen that. And then after that, we've got productivity and costs that will be coming out. Interestingly enough, here they're seeing our non-farm productivity declining to 3.1 in consensus, and we're actually seeing the unit labor costs going up by 0.2%. Again, kind of backwards on that labor market, and we'll want to be keeping an eye on that. And then we've got Jerome Powell. He'll be speaking again in the House conference. We've got natural gas report, bunch of bond announcements. We've got Mester speaking, notoriously a very conservative person of the Fed, so watch that one. We've got a 4-week and 9-week bill auctions, a consumer credit report this afternoon, and then a Fed balance sheet after the bell that nobody's going to be paying attention to. Remember, we're going to get through these data points today, and then everyone's going to be thinking about this big government employment situation report coming in here on Friday, and it's not out of the question to see choppy price action in the market as we wait for that. So kind of keep an eye on that one on Friday, playing accordingly, and know that we've got some Fed speak in there as well, along with the Baker Hughes rig count, which will be ignored most likely. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if this is the first time you've seen these videos, if you could do me that quick favor, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to grow. Thank you so much to everyone who does take the time to do that. I truly appreciate it. Just went over 31,000 subscribers. You guys are awesome. Thank you so much. I very much appreciate it. Let's take a look at some stocks setting up. And remember, guys, these are not recommendations to buy or sell any security. Do your own due diligence. Never blindly follow anyone else's trade ideas. Follow your rules, your guidelines, your risk tolerances on every trade you take. So first off, you guys know I had made mention of TEVA yesterday, and I went ahead and I put a price alert here on TEVA. This has just been one of those beautiful charts. I mean, this is, I love a chart like this because it is just so concise in its price action. And if we pull this back, you can see we've broken through a major resistance here in the chart, resting back to that current trend. And there's every reason to believe on this chart, at least for now, that we have that opportunity that this could find that trend and pop on through, continue on up to the upside. Keep an eye on TEVA. You guys know that I had mentioned that I picked up a position in BMY, and oh my goodness, what a shot that's made in the last couple of days to the upside. Watch that carefully here. We have run through some resistance, so I am expecting a rest or pullback. As a matter of fact, I've sold some calls against this, looking for that to rest or pull back. But watch that closely. Some of these stocks coming up out of the bottom are coming up out of that bottom with significant energy, which really says to me that what we're starting to see is some rotation out of some of those high flyer stocks, and we're willing to pick up some of these more value plays here in the market, particularly heading into the summer when we are typically slow and grindy in the market. So watch that carefully. Any rest or pullback in here would set up the next entry there into BMY. We also saw Pfizer kind of pushing up here. Pfizer's, boy, we've loved to hate on Pfizer. You know, who I'm no fan of big pharma, but big nasty downtrend here. And yesterday got a big pop here in Pfizer. So watch that carefully here. We've got a 50-day moving average above still, but if we can break that downtrend here in the chart and maybe put in a higher low, then there may be some interest here in that chart to be paying attention to. Just go ahead and pop on through there, hold in here, and then see if we've got some upside potential. Unless we can hold that higher low and show buyers following through, no interest in this whatsoever, but I do think it's worth paying attention to. Plug, you guys know I've mentioned this one a couple of times as well, and it's failed me several times. It just hasn't come around. I haven't had any reason to be adding or anything to or buying up this stock because it just can't seem to get going here. But you'll notice this little downtrend right here. We are for the first time putting in a bit of a higher low in there. So I would watch this area right in here. If we can push on up from there, it might start to get interesting because it's going to break above that 50-day moving average. Now, the round and bottom breakout pattern that we talk about a lot is that stock breaking above that 50-day moving average and then holding up here, and then we look for that move that we can start stretching back up toward that 200-day. There's still a lot of work that this has to do with that resistance in the chart, but it may be worth paying attention to here, seeing some of these stocks coming up out of these bottoms. Let's take a look at a few other things. First off, I think you got to be paying attention. There's all this news, with NYCB Bank out there getting a $1 billion capital raise and rallying some, but boy, still not looking impressive. And so far, any of this uncertainty in the regional banks has not had any effect at all in our major banks. So this is a very, very bullish pattern to the upside. Keep an eye on XLF and anything that makes up that ETF, like Goldman, BAC, Citibank. There's a lot of good bullish patterns in those charts, and they're continuing to stretch on higher. And I will add to that things like Visa, this pullback here to Visa into its trend. If this holds this support in here, well, I would be watching for that next opportunity that could pop on through to the upside. Visa, MasterCard, the same. American Express would be one that I would be keeping an eye on. Also very, very bullish in these charts. Continue to watch things in the oil sector. When we take a look at stocks like AR showing that bullishness here, and we saw those numbers yesterday in supply issues. If we've got this interesting dynamic where we're trying to show the market in the bullishness of our indexes that everything is great, and yet we continue to see this situation where demand destruction is happening. Our retail sales are falling, our durable goods orders are falling, our factory orders are falling, but we're not wanting to pay attention to that at all. So we've got this very interesting situation going on here in the energy sector where we're trying to balance demand destruction because of weakening economies, not just here, but China and Europe are weakening, and trying to base that against the supply numbers that also continue to be weakening here in the United States. So very, very volatile, but stocks like AR still looking good. ExxonMobil pushing up. You can take an ETF on XLE and you can see that strength coming up in there. And by the way, just pull up what makes up XLE, and you can start seeing some of these. OKE, very, very strong here. FANG, nice platform up here, pushed up nicely, resting sideways. Look for the next opportunity there. ConocoPhillips trying to come up out of this bottom. CVX, yeah, it's been struggling here in that chart, but I certainly like the way ExxonMobil is looking here. Devon Energy, another one moving to the upside. So quite a few things in that sector showing that bullishness, breaking downtrends, breaking back above their 50-day moving averages, and this is well in its way of that round and bottom breakout attack of the 200-day. So a lot of things happening in that sector, and a lot of volatility and confusion as well. So with that, everyone, hey, I want to wish you all a fantastic day. Thank you so much for being here. Thanks so much for participating with these videos. I'm humbled every day. Truly, truly appreciate it. You guys take care, be safe, have a wonderful trading day, and I'll see you right back here bright and early Friday morning. I wish you all the very, very best.